Everyone is talking about these new 50-year mortgage options. And if that sounds wild to you, you're not alone. Let's break down what that would actually look like using real numbers from right here in Cherryville before we make any decisions. So, right now, the average home in Cherry Hill is selling for about $480,000. The typical conventional 30-year fixed loan runs about a 6% interest rate with a 6.20 APR. So let's take that $480,000 house, put a 10% down payment on it, right? So that means the loan is now going to be $432,000. Now we're going to see what happens when we stretch the term out 30 years, 40 years, and even 50 years, right? So our 30-year fixed at 6%, your principal and interest would be roughly $2,590 a month. And you pay about $500,000 in interest over the life of the loan, the 30 years. If we went to a 40-year, the rate would likely bump up to about 6.625 or 6.85 APR, since the longer term means more risk for the lender. That drops your payment slightly to about $2,450 a month. But now you've added nearly $240,000 more in interest. And if we ever see the 50-year mortgage, that rate would probably sit closer to 7.25% or 7.45% APR. And your monthly payment, again, it falls to about $2,350. But you pay almost $1 million in total interest by the time it's done. So keep in mind, New Jersey's average credit score is about 725, which helps buyers qualify for these rates. If your score is lower, your rate and total cost could be higher. So yes, a longer term lowers the monthly payment, and that's attractive when affordability is tight. But it also slows how quickly you build equity and massively increase what you're going to pay in the long run. Where that comes in is if you're buying these 50-year mortgages or buying a home with a 50-year mortgage, planning to refinance down the line when the rates are more favorable or gets you the same payment but a shorter term time, remember, since you're not building equity as fast, you may not be able to qualify for that refinance. Yes, it's a possibility, and I never want to discount that, but it might take a little longer than you planned. So that's the trade off, lower payment today versus longer term cost tomorrow. So if they ever hit mainstream, just remember it's not about how low the payment goes, it's about how much wealth you're going to be building. Okay. Definitely, affordability is a hot topic right now, and we do need to do things in our industry to help out. But make sure if you're thinking the 50-year term is your salvation, make sure you do the comparison and see, is it really? So I'm Paul Huhn with Funding American Mortgage. Paul loves lending. Again, knowledge, it's a real down payment.